Hello and welcome to Insurance Business TV for an Executive Insights panel focusing on cyber insurance. We're going to look at the trends and challenges in the cyber market in Australia. We've assembled our panel of experts, all of them cyber underwriters. Richard Smith, CEO of Sync Underwriting. Trent Nihill, Head of Underwriting in Australia for Coalition. Jeff Gonlin, Chief Underwriting Officer for Emergence Insurance. And Michael Lewis, Cyber Development Manager at CFC Underwriting. Well, welcome to you all. And let's start with you, Richard. The cyber insurance market cycle, where do you think we're at the moment?
Yeah, look, thank you, Danny. I think we'd all agree that from a pricing perspective, the market is very, very competitive at the moment. Look, what I foresee is certainly the current market conditions will be sustained. I do believe that the majority of the cyber insurers in the Australian market believe that they can provide underwriting profitability with the current market conditions, which is why I think the current conditions will be sustained. And look, I think the other thing which compounds the issue is there are new entrants into the market, there's new capacity into the market, and they probably haven't seen the claims experience that some of the more established cyber insurers have seen.
Thanks, Richard. Trent, where do you think we're at?
Yeah, I'd agree with what Richard has said. I think last year there was some hesitancy to call it a soft market. I don't think underwriters wanted to speak it into existence, but I think you can probably say we're there now. So yeah, prices are coming down. I do agree with that. I think they are still sustainable, so pricing makes sense still. They are down, but still adequate. I think the good thing that we're seeing is it's not just price that's being focused on though. Brokers are looking for more cover and making sure that that's kind of included too. So rather than just kind of looking for the cheapest price, they're also looking at expanding cover at the same time. So yeah, it's a soft market, prices are coming down, coverage expanding, and yes, very competitive.
And Michael, your thoughts?
Yeah, similar to Richard and Trent. New competitors coming in from in Australia and from overseas. Also, a resurgence in appetites from, say, legacy markets who had previously exited or limited their desire to grow cyber in those more difficult times. So it is a much better time for clients to buy cyber. I think we're also seeing broking groups starting to put together cyber strategies in a concerted effort to make use of the soft market, trying to up the policy count for clients that didn't have cyber originally.
And Jeff, coming to you last here, what are your thoughts?
Well, I'd like to know who can predict cycles. Cycles kind of imply that the phenomenon has some regularity to it, which I don't think insurance markets do. It's an open competitive market. There aren't many barriers to entry, and you're going to see what looks at times like irrational behavior. The supply and demand of insurance has its own dynamics, I think. What that means, the wisdom of the market may not be very wise, so you can't let the market price your product for you. Where are we relative to some sort of, normal? 2022 levels, something like that. I think we're getting closer to bottoming out. It's kind of the magic of compound interest. You discount 10 or 15%, and you do that again on renewal, then you discount another 25%, and it's not uncommon. Next thing you know, you're giving up half your premium. So if you go back a couple of years, certainly our book was profitable, but was there, an excess 50% profit in there? No. So I think we will see some bottoming out. I agree with Richard, though. We're gonna see some sideways movement, I think. We're seeing also some of that activity where there's consolidation on the buying side. Some of the buying behaviors, locking in long terms that are sort of typical bottom of the soft market tactics. Look, we price risk by risk, so we're raising prices where we think it makes sense, and we're cutting where it's justified, and so is everyone else. I think so far the market is still doing okay.
Let's probe the market a little more, Jeff, and sticking with you here. I mean, do you see this current situation as sustainable?
Yeah, well, markets are going to be there, of course. They've been there for centuries. The question is whether each one of us is going to be around to participate. Insurance history is, kind of littered with high flyers that became has-beens. So we're a specialist, and cyber is what we do. So, for us, that's an existential question. Underwriters have mostly been making money, although, albeit with some shrinking margins. So pricing is getting a bit sharp, but I don't think it's destructive. We're not destroying capital. Market disruptions, in other words, a hard market, they're very disruptive. They undermine consumer confidence, and coverage and premiums get whipsawed, but gives the industry a bad name. But I think the soft market has benefited both insureds and capital providers, and as long as that continues, the party's going to continue.
Michael, let me put the existential question to you: is the current market sustainable?
I think this is a bit of a yes and no answer on this one. At the current market rates, as long as we see the stabilization that Richard spoke about earlier, then yes, it is sustainable. I think if we continue to see continued trends of declining rates, then probably not. We saw one example of a renewal quote that was able to attain double their limit from last year, but with a really big rate reduction. So, I don't think that is sustainable if that keeps going. CFC, we've remained relatively stable over the last 20 years. We wrote our first policy in Australia in 2001, so we've seen the market fluctuate depending on the years. But having that, like Jeff said, being specialists, having the longevity allows us to have the data to kind of ride that and be a bit more flexible with sustainability and how we get there. So at CFC, we can be around for another 20, 25 years.
Thanks, Michael. Richard, the sustainability question, is it sustainable?
Well, I suppose it's the $1 million question, isn't it? Look, I suppose I'll keep my response fairly short. Look, I think for the foreseeable future, it is a sustainable market.
And Trent?
Yeah, I think it's sustainable was a short answer. I think there probably was a bit of an overcorrection, the hard market a few years ago. So I think whilst it seems dramatic to see 20, 30% kind of rate reductions on a renewal, there's probably some justification there that's kind of a more accurate price. I'd probably say as well, cyber is still seen as a newer product, I suppose. And traditionally in the past, a lot of insurers would build in kind of that unknown sort of loading, kind of what could happen with cyber. I think it's more mature now. We understand losses a bit better. We're getting more data, more information. So it allows us to kind of hone in on the true kind of actuarial price a bit better, which is reflecting the price being sharper. Is basically we don't have to have such high loadings to make it work. So yes, I think it's sustainable and I think it's accurate.
And Trent, staying with you, why is there this industry view that traditional retrospective views of underwriting are incomplete and inadequate when it comes to cyber? Yeah,
underwriting is a very difficult process, obviously. As we kind of highlight, it's you can't predict the future. So underwriting is kind of like driving a car with looking at the rearview mirror. You kind of have to navigate based on what's happened in the past. With cyber, you're moving a lot faster than other class of insurance. So unlike a fire or hailstorm, which is kind of natural peril, we've got actual adversaries on the other side looking to ways to make he hurt our customers more. So you've got an intelligent threat actor there trying to find different ways. So the market's moving a lot faster. I think what we really need to do is kind of get better at collecting that data. So just relying upon limited information and not using technology to bring that data in really isn't sustainable in the cyber market. You need to be actively bringing in threat intelligence and using that before you get just your claims data. So it's kind of collecting more information is critical for cyber. So yeah, that's kind of where we see the traditional markets probably not as being on the ball, is kind of that data collection, which is absolutely crucial for cyber.
And Richard, what's your view on the inadequacy of this retrospective view?
Yeah, look, I do agree with Trent. I think with cyber, obviously risks will continue to evolve, which don't have any historical precedent. which obviously adds to the underwriting complexity. For example, over the next 3 to 5 years, like there's been a lot of talk about AI and deep fakes. Those risks are going to continue to evolve, but we're also going to see, the continued progression of quantum computing risks, which are going to evolve. And I also think there's going to be increased regulation over the next 3 to 5 years as well, with probably more immediate breach response requirements for businesses, far greater accountability for boards at board level. Those are the areas where it's difficult to rely on historical underwriting information to underwrite risks into the future.
It's a complicated issue. Michael, what are your views on this inadequacy?
It's always good to unmute myself. So, look, traditionally, I think the insurance in general has always generally done it on application forms, and same with cyber. It was usually based on a 5, 10, 20-page proposal form, asking about security risk controls, yes, no questions, stuff like that, which I think the way the cyber is evolving, that traditional point in time question set is it becoming a little less relevant? And talking to Trent's point, using the data that we gather in claims, but as well as the scanning or always the practice services we're using our clients and our threat intelligence, it's probably better to get a client on risk and then monitor their real-time exposures and identify them and help them along the journey of cybersecurity. So rather than at one point in time asking controls and then potentially them getting turned off overnight, or them not actually impacting every single client that answers those proposal forms. So many times now, I'm sure everyone here has seen it, that people having MFA implemented doesn't necessarily mean that it doesn't get bypassed. So, I think the using data technology to assist in cyber insurance, the application process, and continued coverage is really important.
Jeff, how do you see things? Is data the answer here?
Well, I don't think this is a new issue. I think it's just expedited as tech tends to do to things. I mean, insurers have always used historical data, of course, but good underwriting is always forward-looking. It's a matter of degree. The world changes as Richard mentioned, and the question is how fast. You look at something like casualty business, product liability, or med-mal. I mean, you need to be able to think in terms of decades. It's just that cyber happens to move at tech speed, meaning that the half-life of the useful data is just much shorter. And, you think in terms of decades in cyber and you'll be dead. So, the need to have forward-looking underwriting will vary by line of business, suppose, but it's especially pronounced in cyber. Absolutely. And I think as Michael pointed out, the challenge really is keeping pace. It's essential to adapt and adopt new tools and methods. That makes it an exciting line of business.
Richard, let's move on to transparency. This is an important issue. Do you see cyber policies as being fully transparent? And I mean, what can you do about client concerns that they aren't as transparent as they should be?
Yes, look, I think the short answer is no, and this has been a little bit of a bugbear of mine. Look, I do think in some of the cyber policies, the language is ambiguous. I also think some of the policies contain claims conditions and policy write-backs, which aren't transparent. And I think it's even got to the stage where, like, AI, yes, is very much going to be the future, but it's got to the stage where brokers are actually subscribing to AI platforms simply to decipher between cyber insurance policy wordings. I mean, is that really what we want? To answer the second part of your question about alleviating client concerns, but there's no shortcut. Brokers have got to do the work. One thing I would recommend to brokers to help alleviate client concerns is what I'd call scenario-based clarification. So just working through different scenarios with clients to ensure they know they have coverage in place. And a good example would be a client who uses a third-party software as a service platform, which they're very reliant upon. And the broker needs to just work through that scenario with their client to ensure that the client has got the coverage that they expect for that exposure. So they're the types of approaches which I think brokers should be using to help alleviate their clients' concerns.
And Trent, coming to you, how do you see this transparency issue with cyber policies, and what do you think brokers can do about that?
Yeah, I think for the most part, I'd say they probably are transparent. I guess like insurance should never be a surprise. Clients should know where they stand, what's covered, what's not covered. I think one of the challenges with cyber is being a newer product, there's probably not as kind of much consolidation of terminology in the wordings. So like contingent business interruption could be called dependent business interruption or supply chain cover. So whilst they've all kind of giving the same cover, everyone's got a different name. And there are nuances and then carve out and write back. So I think brokers need to understand the policy. For the most part, I think wordings have done quite well over the last couple of years of removing things like condition precedent language. Say you are only covered if you do this. I don't see that very often anymore, and it should be sort of stamped out completely, to be honest. But I'd say it's transparent for the most part, but I think we could do a better job of coming together as an industry and kind of getting more standardized language into policies to make it easier for brokers.
And Jeff, what's your view on this transparency issue?
Yeah, I think it's not that complicated. I agree with Trent that if we all called things but the same by the same name, and if it had the same meaning, that would help. You have to differ or differentiate form versus substance. But from the start, Emergence always viewed the cyber insurance market as unnecessarily complicated. We didn't believe it had to be that way, and the mission was really to simplify it and bring cyber to the masses with straightforward, easy to understand policies and processes. I'm putting in an unashamed plug here. I think brokers can help certainly by understanding and promoting products that are straightforward and transparent, like ours.
And Michael, coming to you finally, what do you feel about the cyber policy transparency issue, and what can brokers do about it if there is one?
Look, probably similar to Jeff and Trent. I think that for the most part, they're fairly transparent. There are variances in wordings, and yeah, definitely the terminology can. There are different parts of policies that are all called different things. I don't think we want to standardize coverages in any way, because that hinders innovation, especially in a class of business like cyber that needs to evolve to keep pace. And that evolution is always going to cause challenges with people bringing out new covers and people catching up and all that kind of stuff. So I think that's part of it. A little plug for us. I think our policy is also written in plain language, but we also try and provide education and support around wordings. With our latest wording outside of EDMs on coverage and articles and stuff like that, we created a document that went through about 20 of the enhancements or coverages that gave a case study or a claims example with each of those to try and help brokers explain those coverages or benefits to their own clients. So I think also assisting brokers can with information can help.
Let's stick with brokers and let's stick with you, Michael. There are a lot of insurers, growing numbers of them, targeting Australia because it's got a lot of soft market cyber opportunities, I suppose you could say. I mean, what key features should Aussie brokers be looking for when they're selecting the cyber insurer to go with?
I think it goes back to some of the questions we spoke about previously with stability in the marketplace. Being around for a long time and having a sustainable pricing and coverage and stuff like that is important. Comparing policy benefits, including coverage, but also the size and scope of the risk management services, pre-loss services that are included for clients, and also the ease in quoting and the transaction with the provider. I think lastly, for me, a cyber carrier is going to help brokers' staff with the education and penetration of their commercial book. I don't know about anyone else, but we're not looking to continuously pass around the same 10% of businesses that buy cyber insurance. We want to focus on that non-buyer to help brokers grow their book. So I think that's what they should be looking for.
And Jeff, what do you think that brokers should be prioritizing when they're selecting a cyber insurer?
Well, I agree with what Michael said. I don't think it's that complicated. Look for an insurer who's got the specialized knowledge, who knows cyber, who has the expertise, the track record of reliability. You want somebody that offers a full suite of products and services. So that's broad coverage in straightforward language, ability to tailor it to your client's needs. And I think the service component is rightly so becoming increasingly appreciated and important. So you want to have, I would argue, even pre-sale, pre-loss, and post-loss services to back up the policy. Cyber such a service intensive or service important product, and the incident response in particular, I think, is absolutely crucial, and that's really where the value lies. You don't want to find out in the middle of a cyber attack that you made the wrong choice.
And Trent, what do you recommend brokers prioritize?
I think with all insurance policies, you need to start with claims. So what the claim service like, what the capabilities are. As Jeff said, services is really important. So kind of pre-buying services. So like, can they tell you, can they help sell your client? Can they give you those reports around scanning the client's network, pointing out critical vulnerabilities and kind of helping them before a claim happens? In-house insurance response is very important. What we really focus on is kind of active insurance. So the ability to actually prevent a client from having a loss in the first place. So someone that can kind of continually monitor your systems and give you a heads up before and say, hey, we know this is a new vulnerability. We know hackers are looking for it. And we know right now that you have this vulnerability and this is how you fix it. So prevention is always much better than the kind of dealing with the after effects of the loss. So yeah, those kind of active insurance is critical, I think, and that's the kind of new way for cyber insurers.
And Richard, coming to you in fourth position, well, what are your thoughts?
Look, transparency, I think, is very important. But I know we've spoken about transparency. Look, I also think brokers, in explaining cyber risk exposures to their clients, for example, we provide tools which help brokers explain cyber risk exposures to their clients and how a cyber insurance policy can protect their clients from those different exposures. And I would also, look, I think engagement and availability are absolutely vital for brokers. I think, brokers should be able to pick up the phone and get through and speak to underwriters very easily with great access about a risk which they want assistance on.
And finally, Jeff, let's look at cyber adoption because it's historically been pretty low in Australia. It's about 10%. What do you see that brokers can do to try and change that?
Yeah, if we're going to grow, our products and services have to appeal to buyers, and we've been constantly innovating and improving our offices. I mean, not just us, but collectively. And I agree with Michael's comments about the role of innovation. New features and so forth. That we welcome, constructive competition. I think it makes us all better. We're in a soft market. The product's never been better. The pricing's never been cheaper. It's never been a better time. So, some get it, but with 10% take-up rate, it seems that the majority don't. They're not impressed. So why don't they see the value? I'm not sure anybody has been able to figure this out. It's somehow not resonating with them. And I'm not convinced it has to do with the value of the product, because I think that we've done a fantastic job there. Maybe changes on the loss side will make a difference. It seems once you're more aware of it, if it happens to someone it becomes real. Maybe a consumer psychology issue. So short of mandating insurance, maybe education, I think certainly can play a role.
Trent, what do you see as the secret to more cyber uptake?
Yeah, I think Jeff really hit the nail on the head there. I think it's really about selling on value. I think in the past, we've probably done a poor job of focusing too much on kind of the scariness of cyber, saying, hey, you could have a loss. There's a stat that's been going around the market for at least 5, maybe 10 years around 60% of businesses that have a cyber attack go out of business. That just doesn't ring true to what we're seeing with clients who are uninsured and come to us and clients that we pay out with. Like, yes, it causes serious harm to your business, but I think overblowing the kind of extremes of it doesn't really help sell the product. No one's buying it out of fear. It's really about value. How can you help the client? Why isn't their best interest to have this insurance? What extra service can you get? Like, what advice can you give? It's really about risk management as opposed to kind of that whole fear approach, I think. So I think, yeah, as an industry, we should be moving more into value and kind of showing clients what they get for their money as opposed to trying to use a big stick.
And Richard, what do you see as key to driving greater uptake?
Look, first, I agree with Trent about some of the statistics which are used in the market, which simply just aren't true. I think for brokers, at the end of the day, brokers are selling our products. For brokers, it's an enormous revenue opportunity. Some of them have very low take-up percentages of cyber insurance in their portfolios. And if they do the numbers, which I'm sure they have done, now we're talking about millions of dollars of revenue. Some brokers, look, don't get me wrong, some brokers are very, very good at cyber, very, very good at explaining cyber risk exposures to their clients. But for some other brokers, what they're doing at the moment is simply not working. Look, I think they should consider specialists, either bringing in a specialist just to concentrate on cyber for their clients' portfolios. It is a niche area. Or, economically, if that's not viable, appoint an in-house cyber product champion who has to take on responsibility for the cyber portfolio. So it's an enormous opportunity for brokers.
Michael, you get the last word here. What are your thoughts on driving greater uptake?
I think both brokers and the cyber underwriting market can do things to help. I think from the market point of view, I think we can try and make cyber insurance a bit more accessible to all clients, especially the SME market, which probably need it more than most. Less questions, more information, more education. Similar to what Jeff said before, trying not to make cyber insurance overcomplicated. It's pretty simple coverage for digital assets. From brokers, there's outside of what the other gent said, maybe brokers can do things a little bit different, like talking to clients about cyber at the beginning of renewal meetings, not at the end. It's almost every company's biggest risk nowadays. So maybe not wait because most of it is going to be a new product. So why wait for the last 5 minutes of the meeting before introducing this new and important line of cover? I think upskilling cyber knowledge is probably lastly for me. Upskilling brokers, whether it be getting a cyber specialist like Richard said, or getting a product champion within the business. There's lots of tools, our cyber masterclass, other information that the other providers have that people can upskill and using the cyber underwriters that are available to them, and it is like myself that help brokers understand the risk more and allow brokers to help understand and get over the objection handling, the objections that pop up.
Thank you, Michael, and thanks to all our panelists. You've been watching an Executive Insights panel focusing on cyber on Insurance Business TV. Thanks for watching. Bye for now.